we said earlier, crude is going to be the most important news today from a global perspective, from an overall equity markets perspective. So let's try to dissect what exactly has been up with the crude markets, which have only plunged further into the bear territory. David Lenox with Fat Prophets joins us now on the show. David, good morning from Mumbai to you. I would say that while, of course, the political discourse was on between the two most important geographies from a crude market perspective, this overnight fall of 7% for Brent and 6%, the other way around, 6% for Brent and 7% for WTI. What do you think triggered that sort of a drastic fall? Because this has been one of the worst falls we've seen in almost, I think, 3 years.
Yes, it certainly has been. Look, one of the key reasons we think that we've seen such a pullback in the markets and so quickly is that we saw come out overnight the OPEC numbers for the month of October, and that does show that OPEC as an organisation did in fact increase oil production through the month of October by a significant amount. It was doing around 32.5 million barrels a day, and through October that increased to 32.9 million barrels. So that in itself certainly gave the market a bit of a concern. And behind that, there was an increase in about 127,000 barrels a day in Saudi production. So when you add the two together, the market became very concerned about the direction that supply was perhaps heading in real terms. The other factor was that we did see OPEC come out during their meeting of recent days and suggest that demand in 2019 is going to in fact be a little softer according to their forecast, not by a significant amount, but when you add together the upswell that we've seen in OPEC production for October, a view from OPEC that perhaps demand is going to soften next year, and of course now that's only a month and a half away, then there's no doubt that the prices were going to react in the negative, and that's what we saw happen.
And the entire sentiment around oil markets, first being in surplus and now fears of first being fears of a deficit and now fears of a surplus, has swinged quite violently, I must say. So what is your own take on how the current demand supply situation stands for oil? Because we have had OPEC once again knocking down their oil demand forecast for the fourth consecutive month. There are concerns with respect to demand slowdown, which naturally will hurt oil demand as well. And then on the other side, Iran sanctions have not been completely implemented. Some countries, including India and China, the biggest consumers, have been given an exemption. So how do you see the entire oil supply-demand balance, and do you think the OPEC needs to step in?
Look, we certainly do think that OPEC will step in, and when you think back a week or two ago, we did hear that the Saudis and Russia together were saying that in 2019 they would be looking to cut production. Well, we now know the reason why they've come out with that statement, primarily because there is definitely adequate supply in the market, and of course demand may be softening. So that's why they've come out and said that. Look, we've been expecting to see softer demand in 2019. We thought it would come in at around about 99.5 million barrels. OPEC's estimate for next year is just a smidgen over 100,000. So from that perspective, we still believe that there is some ways to go before we see probably the real demand figures for 2019. If we're right, then we will definitely require OPEC to cut back from the 32.9 million barrels that they did for the month of October. And if they don't, then they will be seeing oil prices probably visit sub $50 if they're not careful.
Okay. So David, in light of that, in light of the anticipated output cut that we could watch out for from the OPEC next month, where do you see crude prices stabilize? We've already had WTI knocked down to 55, Brent knocked down to 65. Where do you see crude prices average? Because just a couple of weeks ago, we had big broking houses talking about $90 and $100 for Brent by December. I don't see that happening anytime soon.
No, look, we were certainly quite sure that we wouldn't see a $100 Brent price this year. We have a range of between 74 to 84 for calendar year end, and even now that's starting to look a little bit far off. But we do believe that with Russia and the Saudis already coming out and suggesting that they'll make cuts in 2019 in production, then we believe that that's probably now, the prices we're seeing now are probably somewhere near the inflection point for both Brent and WTI. A couple of factors that we will be watching, however, of course, we're sneaking up again on the next weekly round of US announcements regarding their oil circumstances. If we see that production increasing again, then that could give us a second downward wind in the oil price in the near term. So we're watching very closely for the releases of those numbers on Thursday evening our time.
Great speaking with you then, and an important perspective to get in given the fact that the crude crash has continued. We're further into the bear territory. So thanks, David, for